financialization of India is really one of the most fascinating shifts underway anywhere in the world. And we all know the numbers, the number of demat accounts, unique individual investors, etc. But a country with barely $3,000 of income per capita per person, yet the kind of access that we've built to financial products because of Aadhaar, UPI, and of course, 80% mobile penetration, digital broking. It's almost unmatched globally. But as we move from a nation of savers to a nation of investors, a few big questions emerge. Does this trend still have mileage, or have we already hit kind of cruising speed? What are the next frontiers in access, innovation, technology? AI is, of course, continues to be a big buzzword. Will that be incremental, or will we see some revolution because of that? And finally, what are the pitfalls, the risks that come from speed, inclusion, and I don't want to use the word over-financialization. I don't know if Mr. Kamath is still here. To help us decode that, we've got three people who sit right at the intersection of finance, technology, and of course, investment access as well. Gentlemen, great to have all of you here. Thanks very much for being part of this event at the Global Leadership Summit. I want to just throw it open with, and get your perspective. Am I correct in saying, financial access to financial products at this level of GDP per capita? Vikram, why don't you start? Have you seen this anywhere in the world? You have a bird's eye perspective.
So, I know there's this question about where we are on this journey, but I think it's still worth reminding us just how far we've come. So, if you look at the Indian markets, 25 years ago, this is when you had Gladiator in the box office. India had a collective market cap of $160 billion. Today it's 5.2 trillion. It's gone up 33-fold over that period. And it's been the best performing market in the world in dollar terms over that period. And actually, by the way, over the last 5 and 10 years, it's been in the top 3 performing markets in the world in dollar terms. So we've come a long way. It's like that old cigarette ad. However, when you think about where we have to go from my perspective, and it'll be interesting to see what Marc and RG have to say as well. I think if you would think of this in terms of an old 5-day test match, we're probably at lunchtime on the first day, right? And the reasons for this are pretty straightforward. It's some of the things you talked about. There's 3 factors. One factor is the addressable population. And like you said, there's about 1.2 crores of individual IDs with the demat accounts. But when you look at what that translates into as a proportion of the...
Sorry, there was 12 crore. 12 crore unique investors and 20 crore demat accounts.
Correct. But when you look at the addressable population, let's take consumer discretionary as an example. Typically, depending on what you're talking about, it's something between 20 and 30% of the population. So you've got a long way to go when you think of our population at 1.5 billion. The second factor is per capita income is still growing, 9% a year, somewhere in that ballpark. And then last but not least, when you look at a share of equities as a proportion of household savings, before COVID, we were sitting at 4%. Now, what is it? It's about somewhere in the ballpark of 7%. If you look at markets you can benchmark yourself against, it's anywhere from 25 to 45%. So you take all those 3 factors, all of which are growing, put them together, and you can see why I'm saying we're at lunchtime on the first day of a match. So.
Lunchtime. Have you finished lunch, or are we still having lunch? Before lunch, after lunch? Lunchtime on the first day of a 5-day test match.
Yep.
That's how you'd put it.
Yeah.
That's, I think, a useful way to think about this in terms of where we are. Arjun, you want to come in? What's your perspective?
No, absolutely. And I would tend to agree in terms of Vikram, in terms of really believing India is truly at its infancy in terms of financial development and overall potential. I think Nasdaq, coming from where I sit, we sit in a very unique spot in the ecosystem, because I think most people here probably know Nasdaq as the big market in the US, one of the bigger exchanges globally, always technologically innovative. But what many people don't realize is we get to supply technology to over 100 markets around the world as well. And really many parts of that ecosystem, whether it be exchanges, banks, broker-dealers, asset owners, you name it, we're sort of involved. And so we get a good perspective on these things, and I can say with confidence, based on many of the markets that I deal with in Asia and Asia Pacific, that the potential here is unmatched, in my opinion, both from a demographic perspective, But to what Vikram was saying, while those numbers are large that you mentioned earlier, it's still a small percentage of what's possible. And so when you think about that opportunity and what Mr. Kamath was just mentioning earlier, if you make the right investments now, the world is your oyster, I think, here in terms of that.
I mean, there is, of course, household assets shifting to financial assets, that is one. But of course, the other one is the country getting richer, which is what Mr. Kamath was referring to as well earlier. Marc, your own thoughts on this question. Where are we? You guys are here and you have big plans, and we'll talk about that in a bit from now. But just the first basic sense of where we are.
So first, I'm going to have to apologize. I talk in billions, and I can't make cricket references because I'm French. I would say that coming from global markets to India, the state of development that you have in the industry is incredible. I mean, you've got 1.4 billion people with Aadhaar. UPI operations per month, which means people can pay extremely efficiently. And then you've got the account aggregator frameworks, which enable to track everything. From a wealth manager perspective, this is all great. It helps you to build a better business. I would say that the innovation now needs to come in how you link it all together and how you create the platform and the systems to make sure that the customer journeys that you offer to your customers are happy journeys. I think there's a lot of work that needs to happen there, and this is where a lot of the innovation will happen.
It's just a question to any of you who, I don't know who wants to take it, but is at this level of per capita, usually, I've read research, etc., which says that, all of this starts at about $5,000 plus. At this level, is there a risk of over-financialization in that sense, or no? Not at all? No one wants to take it?
I personally think it's all relative, right? In terms of, where you stand. I think there's always potential. I think that the key is that the trend is towards more consumer savings and ability to, and discretionary spending, right? And what you do with that amount. And I think if you introduce the right guardrails and the right structure, as Marc was mentioning, you can take advantage of that. I don't think there's really a risk of overly doing it at this point. I don't know if you agree, Marc.
I think that I would look at it differently. I think you need to take a look at it from the perspective of financial inclusion and wealth inclusion. India has achieved, with the numbers I mentioned, financial inclusion. Wealth inclusion is still not there. And that is where a lot of things still need to happen.
Let's talk about what each of you see as the next frontier of, what needs to happen here. We have the rails on which financial inclusion has happened. For wealth inclusion to happen, Marc, why don't you go first? What needs to happen from here?
Yeah, so I can draw a parallel with some of the markets I've had the privilege to work in, and how you move people from being savers to investors, and it's a multi-pronged approach you need to have. So, to simplify it, I would say you need to have the technology. Part of the technology is here, but you need more technology. You need to have the products. And when I say products, there's a complexity because it's not only the investment products, it's also the digital product, which is the whole customer experience. People don't relate to a financial product, they relate to an experience. And then you have the education, which is extremely important. I would say if you take a look at today, the state of literacy, financial literacy, there's progress that needs to happen globally, but I think India, is part of that story.
Just to press on that point, Marc, when we talk about, we speak with wealth managers, etc., all the time, and you get the sense, it's the client out there already has, every client has a, so, and yet there is so much excitement and people are, and it's a booming industry. I know you have strong thoughts on this, but go on.
Yeah, so wealth management, I think, needs to be defined properly first. There's so many versions of wealth management, and you can't talk about wealth management without looking at the individual segments. Wealth management, so first of all, the word wealth can be a little bit controversial sometimes. Wealth management should be for everyone, okay? The democratization of wealth management is something that should happen. Very often, and I think when you take a look at the state of the wealth management industry in India, it's a little bit of an elite, so there's I would say a few thousand families that have access to wealth managers. Wealth management can include elements of advisory, so investment advisor. There's element of succession planning. There's all sorts of different things. And depending on the segment you look at, the needs and requirements will be very different. At the basis, I would say wealth management should be advisory, fiduciary advisory for everyone, whatever your level of assets. And this is where I think a lot of innovation still needs to happen here, because there is these few thousand families that have access to a wealth manager, someone that will talk to them and guide them. And then there's the next 100, 200, 300 million potential clients that actually are in a little bit of a void. They don't know what to do. They need that guidance.
But is there a way to make, I mean, is it a profitable segment as well? Maybe, or you think technology enables that, Marc?
I want to make sure that we all have a chance to speak here, but yes, there is a way. We've seen it happen over and over, across the world. It takes time. It's not something that happens immediately because of all of what needs to be built. The technology is fundamental. So if you think of a traditional wealth management model as a pretty high-touch model, that model is very, very difficult to implement if you have clients which have a lower base of assets. That's just a fact. This is mathematics. But you can, through technology, replicate that. You can develop the systems that will enable you to manage a portfolio, to check on the suitability on a continuous basis, to basically do everything that the person can be doing, but at scale. This is the big developments that need to happen. We've brought our platform, Aladdin, here in India, which can do just that.
And let's just take that technology point forward. And you work with financial institutions and banks and all kinds of companies here in India and provide technology, right?
Yep.
Even regulators, as we were discussing earlier.
Yeah, so to your point on what we think is next for a market like this, Nasdaq, when I mentioned earlier, we support over 100 markets globally. We look at those capital markets really similarly across in terms of our overall strategy, right? We think there's three core pillars to what facilitates good capital markets. First is liquidity, right? Which you all said, I think there's opportunity here. Just simply the numbers you presented earlier, the liquidity will come. But secondly, you've got to maintain trust and integrity in the marketplace. And how do you do that? Building trust, building safety, building those guardrails in place, putting technology in place to ensure that every part of the ecosystem is comfortable that their money is going to be safe, it's going to be investable, the regulators on board as well, and really all parts of the ecosystem feel that way, are super important at this stage of India's development to succeed. And then lastly, once those pieces are in place in terms of liquidity and integrity, is maintaining transparency across the platform, right? So whether that's through good risk management, through good surveillance, all those things that the regulator will ask for, or the wealth managers will ask for, or the investors themselves will ask for. We look at all capital markets in that lens, and that's sort of both in the markets we operate as well as the technology we provide to the capital markets we support as well. And I think that just builds off of what Marc was saying earlier. If you put that right technology in place, everything else sort of will be facilitated from there.
That's my point, right? Liquidity is there. There's enough, global companies want to come and list here. Just to use that as an example of the liquidity and the deep markets that India has.
Yeah, the opportunities are going to be there by default here in India.
So on technology, where are we? Since that's what Nasdaq markets.
Yeah, I think India's at an inflection point in a lot of ways, and I think some of the other panelists earlier sort of alluded to it, whether it was Mr. Chauhan at the NSC or Mr. Kamath just here before. There's so much potential here right now. And obviously, India has always been a center of excellence in terms of technology and innovation as well, in terms of the talent here. And so I think right now, the risk is, I think you need to make sure you learn from other markets as well. Look at other markets that have been successful globally in terms of similar capital market structure that you want to achieve, and follow that. Don't necessarily try to just build it from internal within India. That goes a long ways.
Yep.
But as far as looking elsewhere to sort of see best practice, I think will help take it to the next level. And
the third thing that you mentioned, of course, on safety, right? All the investors who are accessing financial products, you want them to stay once they are here. You don't want them to go back because of some safety issue or some. Yeah, but we've not had those for a while here in India in that sense, right? At least. Yeah, no, absolutely. I think the risk in many of these emerging markets and growing markets is that you have so much excitement and potential that you're eager to get these new products out, you're eager to get new opportunities for retail customers and investors out there. But
You do that, and the one time you have a major scandal or a major scam or a major fraud, you go back to zero, right? One step forward, two steps back. So that's the sort of thing you want to learn from other markets that have gone through that, and try to avoid it as much as possible. Not always going to be possible to avoid everything, but again, just putting those little guardrails in place, the framework in place, so that everyone's comfortable that, okay, great, we can check the box, we're ready to move forward in a very fast manner.
Vikram, your thoughts?
I'd actually double down on that. I'd say the bedrock is trust and confidence in financial markets. And over here, the regulators have an absolutely critical role to play with that. And then the second is look, there's going to be lots of hard work in terms of building the plumbing. So you have intrinsically untapped appetite. You have confidence in the markets. Now it's a question about taking that and transforming that into inclusion and wealth creation. Now, and as part of that, again, coming back on the issue of pockets with products, I think your previous guest, Mr. Kamath, had it right when he was talking about things like REITs and InvITs. So the collective market cap, it's an early stage in the journey, about 8 years now, I think. Collective market cap of $23 billion. Little Singapore has got a collective market cap of $63 billion for REITs. The US is 1.4 trillion. So the resting place is somewhere in between, but a long, long way to go.
We have, I think, now 4 listed REITs, and maybe there are a bunch more coming. So it's like a space which is exploding. In terms of products themselves, Vikram, you have which of the products really, REITs and InvITs is of course one. There'll be financial innovation in a big way as well. Maybe you don't want too much of that. That on the other end is also an extreme. But do you think we have enough of that already here?
There's areas that I think we can deepen. Like the corporate bond market is shallow. There's been a regulatory debate about thinking about that. We talked about REITs and InvITs, fractionalization of shares, tokenization. These are all things that will come with time. So.
On financial sort of innovation, any thoughts?
Yeah, look, very similar, right? I think Nasdaq tends to try to lead the globe, if we can, in terms of innovation on markets, right? And so tokenization has been announced by Nasdaq, and that's coming in terms of tokenizing all equities, for example, making it easier to settle and clear potentially down the road. Extending trading hours, for example, 24/5 trading. Again, for investors in India that are sort of coming into the market, being able to trade global markets seems like a simple idea, but it's not that possible right now, right? And so things like that, digital, carbon credits, all these types of topics are very, very appropriate right now, and all things that Nasdaq is focused on at the moment in terms of just being able to facilitate not only on our markets, but making sure that other markets are able to offer them when they'd like to.
Marc?
So again, I'm going to go back to what I was saying before about the dual level of product. You've got the digital product, and you've got the investment product. The digital product is all about the client experience. And the client experience today is the app. And so I think that a lot of the innovation is how you take what we said at the beginning, all of these different components of the financial industry here, the digital financial industry, and combine them to make the shortest, most efficient potential journey for your clients, for them to have a good experience. That's how you actually get them to adopt your digital product. You need to provide them with all the tools, you need to have the systems behind that, and that's all part of what is in the package. When it comes to the financial product, I would turn to, like the German market, which went through the same transformation, or the Italian market, which went through the same transformation, where the success of the investment product was all about low cost, ease of understanding. If you translate that into financial terms, I would say it's the portfolio at the center and index at the core. And so the way to look at this is to say, look, we are moving from a world where people, and this is still the case here, if you take a look at the asset management industry, if you take a look at the way the products are distributed, there still is a little bit of a product push. And you realize that, again, your clients, your potential clients, can't relate to these products in most cases, which is why you have 1.4 billion people in India and 55 or 60 million mutual fund investors. So what you need is you need to move away from that, and you need to think, how do I communicate with my clients? How do I educate them around what their needs and requirements, how they should think about goals? How do I map those goals to a financial product without talking to them about a financial product, which is then, again, all part of the experience. And I think a lot of the innovation comes in terms of how you message these incredibly complex financial concepts, which everyone here understands, but most people on the street don't. That's a lot of work, a lot of hard work, a lot of education that needs to happen.
Do you think costs are too high, Marc? I mean, cost of financial products, cost of access to financial products. I mean, what you're paying for is fees, basically, across a range of instruments. I
think that a lot of markets have responded to that question with the concept of value for money. Cost is I don't think it's the right concept. I mean, what is it you're getting for your money is a much more interesting one. I have, again, I have the privilege of working with a very large Swiss bank where you have that segmentation between mass affluent, and then HNI. And the way they deliver the products and the products they delivered was, of course, extremely different. And you realize that even for the HNI segment, the value for money concept applied because a lot of the portfolio in the core asset allocation actually moved to very efficient, model-driven, index-driven asset allocation. And that is, again, the concept of value for money. You can achieve exactly the same outcome as you would. You can achieve the same alpha through an asset allocation. So the fundamental active equity products that they were buying through an advisor at pretty high cost, you realize that you can get the same value for less money. That's how I would respond to that question.
Sorry, Ajay, you want to say something? We're out of time. Vikram, you've been here, what, 4 months, 5 months?
That's about right, yeah.
I mean, you want to just, as we close out, what is Bank of America, I mean, goals you're setting for Bank of America here in India from here out?
So I think the first thing to emphasize is that while I might have been here for 5 months, the firm has been here for over 60 years and has got very, very deep roots in the Indian markets. And we operate across our entire spectrum of businesses, and we grow rapidly and profitably. So then if you take a step back, the reason I voted with my feet and came back home is because this is a strategic priority for the firm. We intend to grow substantially going forward. And the team and I want to make India a really important part of the growth narrative for Bank of America. And I'm just excited to be here and happy to be here.
We're excited to have you here. And I hope this is the first of many. Vikram, thanks very much for being here. Arjun, great to have you with us here. Marc, thanks very much for being here on this as well. Appreciate it. Thank you. Thank you, gentlemen.
Thank you to our panelists as well as Prashant. But stay tuned as we decode who owns the future of money in just a while with Forum Mehta, VP and Head of International Cyber Risk, PayPal, Harshal Mathur, CEO and co-founder Razorpay, Dilip Asbe, MD and